Going up today, stocks start the week higher. A look at David Tepper's latest moves, the top growth stocks this year, the latest news on tariffs, inflation nosedives, and everything else interesting happening in finance today. We're going to have a good week, guys. Let's go. And welcome back to Click Capital, where we're focused on signals, not the noise. And if you're not making any money today, you're doing something wrong, or possibly following the wrong person, because even though indices are still off highs, and they were only up a little bit today, this is still an amazing market full of opportunities. Underneath the surface, especially for small cap companies operating in the industries of tomorrow, there is plenty of volume and momentum in these names. And so if you're new here, welcome. My name is Jared, and every day after market close, I break down all the latest action across key markets, along with sharing some of the trades I've been making myself. So you're welcome to join us here at Click Capital and start following the only YouTuber that trades with full transparency in front of his members. So hit that subscribe button and stay up to date with markets. And a big shout out to all my regular daily viewers as well for helping to make Click Capital one of the fastest growing finance channels online. And so like I said, even though markets were up today a little bit across the board, if you dig deeper underneath the surface, we've got some sectors on absolute fire, robotics being one of them, catching strong bids across the board here today. Palantir AI up 21%, and another small cap robotics stock, Serve Robotics. They've actually got investments from NVDA and Uber. They do last mile delivery of food, which is now approaching this big resistance zone around $22 a share again. We actually get to hear earnings from them in 2 weeks. We did hear earnings from iRobot today. They make cleaning robots available for consumers at home. Had a really good pop-off earnings, as did large cap company Rockwell Automation. They're involved in designing hardware and software for manufacturing, robotics, and automation. A big theme out there, and actually one of the oldest robotic stocks on the market, Intuitive Surgical. Another large cap, 212 billion market cap. They make medical robots to assist with surgery. Already been in a strong uptrend for quite some time, and this is a long-term winner of a stock. It just goes to show even the biggest robotic stocks are well and truly in a bull market here. And one of my favorites, Rich Tech Robotics, another small cap, only 330 million market cap, was actually down 4% today, but that's actually a great result. Just going down to the 15-minute chart here. On Friday, we heard news from them of them actually opening up their own new restaurant chain, Clofy & Tea, where their robots are serving up beverages. I'll show you them soon. Got the market excited. Then they came out after close on Friday with the secondary offering, 200 million, which understandably got the stock sold off really hard. However, that dip was bought right away. We bounced right back up, pretty much recovered all of that lost ground, and the stock kind of just bumped around today after rallying up early in the morning. So down only 4% on a pretty sizable secondary relevant to its market cap is actually a great result. And for those of you who don't know, Rich Tech makes a number of different robots, Adam being their biggest one, a bartender, but they've also got other ones to help deliver parts around workshops and cleaning robots as well. And so like I reported last week, that is now at the grand opening of Clofy & Tea in Vegas. That's where they're headquartered, with their robot Adam on display, with shop assistants there as well, to do other bits of food and assist customers in interacting with the robot, as this is all new stuff. And so as I'm not currently in Vegas, I did a little digging around on the weekend to see if I could find some feedback from people on the ground, for which I did find someone on X who said she went to Clofy & Tea and that the rep there said Adam has made over $30,000 of revenue in just 30 days working at the Vegas Rangers games. And so Rich Tech rents these things out for about $1,200 or so a month. So that's a really good ROI there. And by the looks of it, this launch went pretty well. If they can actually prove their concept themselves, and there's a look inside Clofy & Tea with Adam the robot there. And so if they can prove this concept, ROI, they'll actually demonstrate to other companies that they can be used for profit, and they can potentially even roll out more of these drink shops themselves. Especially now they've got 200 million coming their way, and they've got a low level of cash burn. Most of their debt isn't due to 27, 28. So this will give them plenty of runway, at least another 3-4 more years of capital for runway. And like I said, they could use that to open more Clofy & Tea. And if investors get behind it, they can go against the short sellers that quite often attack stocks like this that are burning through cash, not yet profitable, questions over their business, could potentially be turning the tide. And like I said, market cap of only 350 million. Just on investor excitement, this could easily get to $1 billion or $2 billion in market cap. They've already partnered with Walmart as well to roll out in 20 different locations in ghost kitchens. And so if we got any more news of big contracts or this store really turning a profit and growing, gaining attention, the stock could easily have a monster run like we've seen in quantum computing, space, and nuclear stocks of late. Otherwise, this is pretty cool stuff. I'm happy to be a shareholder in the company myself. And as always, this is not financial advice. Please do your own research. I'm just sharing mine with you and stocks that are getting me excited. And they do have competent management as well. In fact, they've got one of the ex-McDonald's CEOs on the advisory board. That's a really good sign. He obviously believes in the company. And just looking at the board of directors, again, competent management. Guys that have had plenty of experience in Vegas, entertainment, financial businesses, and even healthcare as well. And there's a CEO and founder, Wayne Huang, a natural-born inventor and innovator with more than 20 years experience of computer vision-based technology. So Rich Tech's the work of this guy's life. He's dedicated to this field, and I just think it has huge potential and is inevitably the future. And like I said, 337 million market cap, is getting plenty of activity and attention already. 31 million shares traded here today, but hasn't quite had the run like a lot of these small robotic stocks that we've seen in other fields like quantum, space, and small modular reactors. And actually, I just gave out another micro cap robotic stock to my paid stock picks members yesterday. And that one's even smaller, under 100 million market cap. And just like Rich Tech, it has huge potential. Contracts with the US military, potential for widespread use, not only in government, but especially in businesses as well. And along with some other stock picks of mine, like Internet of Things company Powerfleet, which ripped up 31% today. That helped to push our stock picks portfolio up 2.6% today. Currently up 11% year-to-date time-weighted return, sitting at all-time highs. So like I said, if you want to follow the only YouTuber who runs a transparent stock pick service, click the link below this video, as I've still got available spots, and you'll get one new stock pick from me every Sunday that I'm about to invest in on Mondays, along with access to the private members area, where you can see all my trade screenshots and details about everything else. Currently got 27 stocks in the portfolio, a lot of potential, but believe it or not, the biggest robotic stock out there is actually Tesla, with a lot of exciting things happening right now and just around the corner. In fact, as a long-term Tesla shareholder myself, I can honestly say this is the most exciting time for us. And you can hear that with Elon on the last earnings call as well. Just to name a few things, we've got the new Model Y launch this year. The first builds are Tesla semis, coming from the semi factory. Robotaxi begins deployment in Austin this June. Thousands of Optimus bots are already being produced, getting ready to be sold to the public next year. This is a monumental time in humanity's advancement. Humanoids are a real thing. It's going to be a market for them starting next year. Whilst a lot of people out there are still fussing over the daily candles. However, don't focus on the noise. There's no money to be made there. The stock goes below 340, it might go to 320. That's useless info. The money is made by focusing on the big picture and positioning for that. And sure, technically speaking, if we measure a Fibonacci off the low prior to earnings to this most recent peak, then we're currently at about a 50% tracement of this most recent move. And this is typically where stocks can find their footing, around the 50% to 60% area. So this area here could very well turn out to be another buy the dip opportunity in Tesla at 350 going down into the low 300s. If we go below $300 a share, I'll definitely be adding a few shares to my long-term position. But like I said, guys, don't get too caught up in just the daily candles. That's the short-term noise. Focus on the signals, the fundamentals that are driving the stock, their new products. And sure, we have a little bit of softness in Europe, Chinese sales. You'll see that with every winning company. Not every quarter is linear growth. It's always going to be bumps in the road. Nothing's ever perfect or without risks. However, like I keep saying, Tesla is at the forefront of what's taken us all into the future. AI, robotics, automation, robo-taxis, humanoids, energy and battery storage, and who knows what else they can get into in the future, being the world's leading clean energy brand. And so just scrolling through my themes watch list here, which I'm continually adding to, most other hot sectors were a bit mixed today, except for space. Actually might even be doing a little bit better than robotics today. Again, these exciting small cap growth names, catching a strong bid there. There's Rocket Lab, and others like Redwire, Satellogic, and AST Space Mobile. Still gaining a lot of investor interest here. Got a little bit of a bounce there in NVDA today, back above the 50-day VWAP, where a lot of these quantum names are still consolidating as well. Another one of my favorite stocks I've been speaking a bit about lately, doing really well again here today, Uber, slapping on another 5.4%. Remember last week after earnings, they did come out with good numbers. Market slapped them down. Then we got news. One of the best investors in the world, Bill Ackman, has built a sizable stake in the company. And so he's a billionaire hedge fund investor with a long-term impressive track record. And why it's notable when he makes moves and how it's different to most other hedge fund managers is because most fund managers in their portfolios, I think the average amount of holdings is somewhere around 40 or 50. A concentrated portfolio in the fund management world is often considered around 20 stocks or so. However, Bill Ackman runs his portfolio, and he's always done it this way, as what's known as being very concentrated. Quite often, he'll only hold between 5 and 8 stocks in his portfolio while managing billions of dollars. And so Uber's now one of them, and he employs hundreds of really smart analysts and researchers, guys with PhDs, and they've run the numbers, and they think Uber is a smart place to place their money. Still calling it great value, which I agree, and we're getting some really good technical action here in the market. Really big momentum thrusts that my indicators are letting me know are occurring after earnings, and that's what us, the bulls who own the stock, like to see here. Another really good investor we follow around here, David Tepper, another billionaire hedge fund manager. He just posted his Q4 trades a bit earlier than most other fund managers. They've got up to 45 days after the end of each quarter to give us their 13 Fs. And wow, once again, one of the best investors in the world, up in his bets on China. Alibaba, now the biggest stock in his portfolio, 15.5%. He increased that by 18%. Actually sold some Amazon shares, reduced that 18%. Add a little bit to the other Chinese stock, Pinduoduo, really bumped up his bet on Vistra, electric utility, increased his bet on Chinese stock JD by 43%, dialed it down again on American tech, Meta and Oracle, increased on China large cap ETF, dialed it down on Lyft, and increased on NRG, AMD, KWeb, and Baidu. So easy to see, Tep is betting big on China here, and he started this a few months back actually. And so isn't that an interesting contrarian bet? Going into what a lot of people are telling us is going to be a global trade war, it's going to send us into the financial apocalypse, global recession. People say it's even going to turn into military actions. Everyone just loves the drama, right? But the truth is, the market has shaken all that off, and we've got FXI, the China large cap ETF, actually pushing up on multi-month highs here again today. While Tepper's biggest position, Alibaba, slaps on another 7.5% on another volume momentum thrust. Really strong moves coming up here, even though the stock is technically overbought in the short term. Again, this is all good signs for bulls in the stock like myself. This is exactly what we want to see. If this is the strength in the stock at the start of a trade war, what's it going to do when it resolves itself? That is, if we get a good deal, or maybe the market even shrugs it off, tariffs, the tit for tat between the States and the Chinese. And I think people don't realize how much choice we as investors have on the NYSE and NASDAQ when it comes to Chinese companies listed there. Here's another one I gave out to Stock Picks members just a couple of weeks ago. It's already up 28%. GDS, they operate data centers in China who are also benefiting from the AI boom over there. Stock breaking out to a 52-week high today, and another similar Chinese data center operator, VNet Group, already in a strong trend here, along with Kingsoft Cloud, another data company coming out of China. These stocks are already in a really strong bull market. And another one we're keeping an eye on that just came onto the market, Pony AI, Chinese stock involved in AI and making hardware for electric vehicle. A bit of a bid there on some volume today. Wouldn't be surprised to see this one break out as well. Also doing well today, a sector that's been neglected for years, gaming, Take-Two Interactive, popping up after earnings. On the back of recent news, Grand Theft Auto 6 is coming this fall, real blockbuster title for them. We'll see whether this can spark some interest in some small cap gaming stocks we're watching. And there's a look at some popular growth stocks, some of the best performing ones so far this year. Oklo, Tempest AI, Hims and Hers Health, another big winner for us, Cloudflare, Robinhood, even Ginkgo Bioworks, DNA, really coming back these last couple of months. So like I've been saying, the market for these small cap and even larger cap growth names is on fire. That's why having some exposure to this area of the market's good for diversification. Even if your large caps are flat or your cryptos are going down, when you always run a few strategies, that's how you get the really good diversification benefits. But no doubt we'll be hearing from the bears. And this latest statistic from Carson today, showing if stocks break the December low, it's a warning sign, just like we did this year. If the S&P 500 takes out the December low in Q1, looking back over a long history, the market only finishes up 48% of the time. However, these stats can be a little misleading because you can see a heavy concentration of negative years back in the late 50s and 60s into the early 70s. Quite a lot of volatility in the market around those times. The markets have changed significantly, especially in the last 20 years, the electrification of markets. So looking back in modern day markets, bar 2018, the last 3 times we got this signal was in the last 3 bear market. A real quick one in 2022, 2008, and the early 2000s. The majority of the other years finished positive, and I mean, I wouldn't go basing my whole investment strategy just on these 2 candles here that took out the December low, because we were trading pretty firm there coming into December, early December. Briefly took out the December low there on the 10th and 11th. The market bought that dip up, and we seem to be holding ground here pretty good. Considering everything that's going on with tariffs, the market is actually quite tame. The VIX at 15.8. And if you want to get hung up on stats, well, I got another one here for you. Super Bowl blowouts are what the Bulls should be cheering for. We just saw the Philadelphia Eagles by 18 points. Looking back in history, whenever we've seen this big point difference, 21 or more, the market's positive 85% of the time. And this is the perfect example, and although it's obvious because it's sports, just got to keep in mind, correlation doesn't always mean causation. Just because 2 data series are correlated doesn't mean they have an actual relationship. Because like the old saying goes, if you torture data enough, it will confess. You will find patterns in there. But like I said, that's enough to get the bears fired up. There's one that came up on my feed yesterday from a guy who identifies as a professional trader. He's got over 200,000 followers. The US is now in recession. So apparently the Fed, Goldman Sachs, JP Morgan, they're all wrong. Estimates the economy's been growing at 2.8% and still is this quarter. That's all wrong. According to this guy, here's what's to come in the next 2 to 3 quarters. Negative GDP. I thought he said we're already in a recession. That implies negative GDP. Anyway, apparently that's coming in the next 2 to 3 quarters. Massive rate cuts by Fed, layoffs, white and blue collar, $3,000 gold. Well, we're currently sitting at $29.50. That might actually happen tomorrow or later this week. A surge in supply of existing homes. I'm not sure exactly what that means. Prepare now. Again, I get these type of posts showing up on my feed pretty much every day, calling for the apocalypse, just like this entire bull market. So you can focus on the fear and the noise, or you can focus on the underlying fundamental drivers of the market. Big one being the biggest capex cycle we've seen in our lifetimes. Just the 4 biggest tech companies plan on spending $315 billion plus on capital expenditures this year. That is a monster number. Along with corporate buybacks, huge tailwinds for the market. Pretty sure the dips will get bought. And so far as we make our way through to the end of Q4 earnings season, so far so good. Companies coming in on the whole above averages. Key ones we're paying attention to this week: Cisco, Robinhood, Reddit. I'll also be taking a look at Airbnb, Coinbase, DraftKings, and Moderna on Friday. But there's still fears out there that Trump's tariffs could cause an 8% hit to earnings if Mexico and Canada retaliate, which at this stage still very much up in the air. Really surprised the VIX is not a bit higher, just even on a little bit of uncertainty. Market seems to be shrugging it off pretty good. Prospects of a trade war that could affect economic growth. The truth is, those other countries have a lot more to lose. US has immense leverage. And so hopefully we can get some good deals done that works out best for everybody. But this is still a theme that's going to play out in markets likely for months to come. And it affects all asset classes, not just stocks, but also currencies and commodities. And we just heard Trump today announce 25% tariffs on steel and aluminium coming into the States. Now there's a big misconception out there that this is all new stuff. Tariffs have been used for actually over centuries. And in fact, a lot of countries impose even bigger tariffs on US imports. This is what Trump's upset about. Huge trade deficits on top of massive, and as we've been finding out, completely unchecked foreign spending. And a country that's been running debt at 6% of GDP, that is simply unsustainable. All that spending does need to be dialed in. And that should also help support US steelmakers. I actually saw the Van Eyck Steel ETF, SLX, pop up a little bit there today, 3.4%. With some of the biggest gainers, Cleveland Cliffs, slapping on 18%, and Nucor as well, looking pretty good there on the chart. Like I said, unless we get a full-blown global trade war, which I don't think we will, and if we do, it should resolve itself pretty quickly. If it does cause pain in the markets, it'll just prompt everyone to come to the table, get a deal done. I wouldn't worry about it too much. I wouldn't place all decisions about my wealth on speculation that we may get a global trade war, and who cares even if we do? We invest in businesses based on their future expected cash flows, not because we're worried about Xi Jinping placing a tariff on US soybeans coming into their country. Pretty much irrelevant. Just causes short-term fear spikes in the market that you can actually take advantage of. And so we'll get to hear from Powell tomorrow on Wednesday, which he may give some clues on how he sees monetary policy. Pretty much going to sound the same. I think they're in wait-and-see mode. Have had the 10-year pull back a little bit after the initial Trump bump that we've got. We also get inflation on Wednesday, which should be interesting because just looking at Trueflation, and they use millions of data points from in the real economy, looking at retailers' websites and everything. Absolutely nosedive over the past couple of weeks, now running at an annualized rate 2.11%. And so retailers did load up on inventories coming into Trump's term, foreseeing tariffs. They've got those excess inventories. They're going to have to do clearance sales, might be bringing down prices already from the huge buildup in inventories. However, like we saw last week, consumers are still worried about inflation. However, they could be just that for now, worries. Their expectations, because the media has been pounding them with headlines. Tariffs are coming, price of your avocados are going to skyrocket, look out. But here's the thing, if this new US government does significantly and materially reduce their spending, that could also reduce treasury issuance. And like Trump's team's been saying lately, even if the Fed doesn't want to lower rates, they can still work on getting bond yields lower. Less treasuries out there means there's less supply. Theoretically, if there's the same amount of appetite for treasuries, that should attract a lower yield. And if economic growth is still holding up in that scenario, that's a really bullish environment for risk assets like stocks, especially growth stocks and other high beta names. But if government spending cuts are too aggressive, that could cause a bit of softness in the economy, no doubt leading to a bit of stock market volatility, potentially some slow growth in sectors dependent on fiscal support, maybe like infrastructure, construction. So it's going to be interesting to see how that plays out. But for the here and now, gold is still ripping. Like I said, just a bit over $50 an ounce away from $3,000. No doubt central bank buying, inflation hedges, has been doing pretty well considering the dollar's strength, and that geopolitical tensions look to be getting dialed down, and the gold miners could be starting to wake up here. Here's a stock I sold the 42 puts on last week. Newmont having another good rally there today, 3.6%. Another one I gave you guys a week ago that I also sold puts on, Zim Shipping, up over 7% today on good volume, reclaiming its 50-day VWAP here. Another good stock to diversify a portfolio amongst tech and growth names. Some shipping and some gold. And the good thing is, since crude oil, price of that's been so tame, pretty much gridlocked here in the low 70s, that's helping the cost to get gold out of the ground come down. We now got the widest gap between the average cost of production for gold miners and the average gold price. This is actually accelerated. We're now closer to 3,000. And so this is absolute boon times for gold miners. Just not so much for their stock prices yet. Still has a lot of potential to catch up on gold miners. And that spread has been ticking up, like I said, this last couple of weeks. And that's actually multi-decade lows, the spread between miners and the underlying. So still a lot of potential here. Also just hitting the wires, an Elon Musk-led group apparently just made a $97.4 billion bid for control of OpenAI, the company that owns ChatGPT. He started it with Sam Altman, with his vision being an open source non-profit to advance the best interest of AI and protect humanity from the inevitable future threat of AI. He helped to fund it at the start with up to $100 million of his own money. He had to leave to focus on his other companies. He thought OpenAI was left in good hands with Sam Altman. However, things took a bit of a turn. Microsoft got in there and they pretty much have converted it into a for-profit company, for which Musk has already taken Altman to court. He wants OpenAI to return to the open source, safety-focused force for good it once was. This is really interesting to see if he can pull this off. He's got big backing by a bunch of private equity companies, including his big wallet himself. And this is his company XAI, looking to overtake OpenAI. I'm not sure if he can pull it off or not. Maybe looking to get in between this new Stargate project, which he may have been blindsided by a little bit. And we're already seeing the tit for tat just on X as I speak. Sam Altman from OpenAI replying to Elon's bid, "No thank you, but we will buy Twitter for $9.74 billion if you want," moving the decimal spot on XAI's offer one number over. For which Elon replied, "Swindler." And just looking at Microsoft stock price, not really reacting here. We'll have to follow this news story up tomorrow. This is coming from a credible source, Wall Street Journal, so there should be some substance to it. So we'll keep an eye on that one. And just wrapping up today with some other hot stocks out there. Bernard Technologies, who offer non-lethal weapons, really ripping up there. And like I said, some of these space companies just ripping here today. SatLogic, 22%. And telehealth really coming back. There's Teladoc. Look at this, 4 consecutive momentum thrusts here. Up, 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 up. A lot of activity. In my position in the telehealth industry, Hims and Hers Health, once again, having another good day, up 5.2%. So like I said, if you're interested in getting all my stock picks before I buy them and before I talk about them here on this channel, if you want to find out what my latest stock pick was, a small robotics company I'm really excited about, along with getting my new pick every Sunday morning in your inbox, a deep dive report and access to the private members area, click the link below this video, head on over to my website, clickcapital.io, and check out my stock pick service. Otherwise, that's pretty much a wrap for today, guys. Thanks very much for watching the Daily Market Review. My name's Jared, and I'll see you back here again this time tomorrow. Cheers.